What's up, guys? Welcome back to Road to the 2 Comic Club. It is 10:30 at night again. Been struggling with this TD Ameritrade. I'm still trying to figure things out. There's some things I don't like about it. There's some things I do, but we're going to talk about today because we lost money. Obviously, the Jerome Powell's first hearing in front of Congress kind of scared investors. They're worried about the rate increases, which I'm kind of not sure. I don't know, they know it's coming. We all know it's coming, so I don't understand why people are continuing to freak out as if it's gonna come, because it is coming. The interest rates are gonna go up. I just don't get why people are, it's like they're getting scared as if they're hearing it for the first time. So I don't know. But anyways, we did have a few gainers today. We had Weight Watchers. Our Spider put went up and the QQQ put went up, so we made a little bit of money there. It's just okay, so here's the thing that I don't get. Oh, okay, so the day gain. All right, yeah, so this was the day gain for, let's see, the puts were the second and third on the list. So we did pretty well with those. But overall, you can see this is my overall gain right here. So I'm down on the QQQ put, still up on the Spider one, and then Weight Watchers are still up on that. We're up 20% total on that, so that's pretty good. But there's a lot that went down. Sorry, I just did some push-ups. I'm trying to do a little workout regimen where I do 50 push-ups a day, and I just did my last 10. So I'm breathing a little hard because I'm out of shape. But anyways, we had a lot of ones that didn't do well. The day gain, let's see, the percentages are right here. These are the day percentages. It's not horrible, but it wasn't great, obviously. We didn't have any loss in the thousands. And the reason that that's showing positive is because I bought an OLED call today. So let me show you what I got. Sorry, I'm gonna scroll up here for a second. Okay, so this thing also doesn't make sense. For some reason it says that this call that I bought that expires on Friday went up 49,900%, but it didn't, because it's worth 5 cents right now. So that must be a glitch. I don't know. I'm not understanding that. Oh, I also sold a covered call because I forgot to do that yesterday. So I sold the covered call for my OLED stock. So I got $67 and something for that because I sold it. So I got the money there. I'm trying to do that every week as long as I hold the shares. This one has a 135 call or strike, and OLED's it closed right at 130 or so. So we're close to the money, which we don't want because we sold the call. But the way the stocks are going this week, I don't see it hitting 135 by Friday. So hopefully it could stay a little bit below 135, even if it goes up a little bit. That's the goal there. And then the one that I did buy today is this one. So the way I figured, here's what I figured. I was gonna buy another 100 shares, which would have been safer, I guess, in terms of risk, because I could have sold two covered calls instead of one. Oh, I hate that it does this. Come on, stop. I just want to put my mouse here. Okay. So I wanted to buy another 100 shares so that I have 200 shares, but I needed 13,000 to do that. And I had 11, so I would have had to, and I was already selling some stuff. So I didn't know what else to sell. And I just figured, you know what? The CEO was really expecting a great year in 2019. I'm expecting a great year in 2019. So instead of buying 100 more shares, I'm just going to buy a 2020 call. So I bought 3 of them actually because I could afford 3. And it cost about $9,000 it cost for the 3 of them. And so this gives me plenty of time because I have until January of 2020, and the strike is 160, only $30 higher than it is today. And I have a year, I have almost 2 years for that to happen. So I figured, why not just do that? I'll make a much higher return doing this than selling covered calls every week. And if their stock does go up. So that's my strategy for that. In terms of news, I gotta grab my iPad real quick to talk about the news, but I'm only gonna talk about a couple things, and then we'll wrap it up because I gotta go to bed and wake up early tomorrow. So, 1 second. All right. So before I talk about these articles, I want to point out another thing that confuses me. So again, look at has my balance. Let me try to show there. It says I lost $7,046.76 today. That's how much my account dropped overall. And yet when I did the math, according to my balances yesterday, I only lost $6,500. So it's off by $500. And again, this kind of thing just bugs me. I hate when the numbers don't add up. So I don't know if it was, I really don't know why it would happen. Like, I don't know if it was because of after hours trading, maybe. Some of the stocks changed since 3 o'clock, and maybe that's why. That's my only guess. If you have any idea, if you're familiar with TD Ameritrade, please let me know. That'd be very much appreciated. So anyways, about Jerome Powell, the new Fed chair, he said that he's not worried that the recent volatility in the financial markets and higher long-term interest rates will dampen the economy. He says, and despite a likely drift upward in consumer prices, he expects inflation to remain contained. So that's good news. You know, we don't want inflation to get out of control. That's really the big worry. If it can stay stable and controlled, then that's good. He did mention that the numbers, there's a lot of stuff that was influenced by a lot of things, and I'm just going to go over some of them. This article was titled, "Economy Looks Strong Despite Stock Volatility," Chairman Jerome Powell says. So I'll post a link in the description for that. But he basically said, I'm just going to read what I highlighted here, some notes here. He says inflation has been low and stable. The unemployment rate has fallen to a 17-year low of 4.1%, and monthly job growth averaged 179,000 during the second half of 2017. The 17-year low part kind of scares me a little bit, because that's really low for like a 17-year low. That's like, can it go much lower? And I did remember reading sometimes somewhere on CNBC, an analyst mentioned that if it does go to like 3.5%, that's like basically like the lowest it could get before we start to go back into a bear market. And so that's just a number that I'm keeping an eye on this year. The economy, he said the growth in the second half was led by solid gains in consumer spending, supported by rising household incomes and wealth and upbeat sentiment. In addition, growth in business investment stepped up sharply last year, which should support higher productivity growth in time, which sounds good. And he said the economy grew 3% at an annual rate in the second half of last year, which easily beat the average of 2.1% throughout the 8.5-year-old recovery, like the last 8.5 years, basically. And then he reiterated that the Fed plans to ease regulations on small banks that played no role in the 2008 crisis. The mortgage crisis, as you guys are probably familiar with. Some lawmakers have said that the rules are posing burdens that have hurt lending. You know, he wants to relax a rule requiring banks to hold a certain amount of capital against their assets to protect their financial health in the event of a crisis. He said some critics have said the mandate discourages lending, and our plan is to roll it back, is what he said. So hopefully his plans and his strategies will work, and we won't have another meltdown like we did at the beginning of February. Anyways, so on top of that, some positive news. Even though that was kind of positive, but the stock went down today because of all that, so it wasn't really positive. But positive news with Amazon, they acquired the company Ring, which you've probably heard of, seen commercials. It's the doorbell with the little camera on it, which is funny because they were on Shark Tank, and the sharks turned down the offer that he was giving, the guy, the CEO at the time was giving him, or the owner. I think he's still the CEO, the founder, but they missed out on a golden opportunity there, because they're saying that Amazon acquired them for probably around $1 billion deal, which is really, really large. And they're incorporating the Alexa on their Echo Show. So basically, the Echo Show is kind of like the Alexa, but it has a little screen, and you can tell Alexa to show, like, say, Alexa, show me who's at the door, and it'll do a live feed from the Ring doorbell to the Echo Show, and you can actually see from wherever you're at in the house. You could see, like, wherever you're near one of those Echo Shows, you could see where the camera's pointing outside, and it's really, really cool, a really convenient feature. I think it's going to be really awesome. A lot of people are going to like it, I think. The CEO is saying a lot of their customers were hoping that they could integrate Alexa with their Ring doorbell, and I think this is a really, really cool step in the right direction. So Amazon, getting in yet another industry, home security. So yeah, I'm really bullish on Amazon, and I think that's really awesome. So with that said, if you like this video, please hit that like button and subscribe if you haven't already, and subscribe if you, I just said that. Share with your friends if you want them to see how I'm doing with my journey to getting to $1 million. Hopefully you guys are learning a lot. I need to ask a lot of questions to TD Ameritrade with this whole thing, so I got a lot of work to do. But yeah, so thank you guys again so much for watching, and we'll see you tomorrow.